Hello again, everyone. In this technical analysis of the stock market video, I call it When the Music Stops, because this reminds me, the stock market reminds me of a game that you played as kids, and kids play musical chairs. You know, they got the chairs all set up in a circle, and everybody's walking around behind the outside of the ring. When the music stops playing, you're supposed to scramble to be able to sit down, and there's always one less chair and somebody is out of the game. And, you know, you kind of get that feeling when you look at what happened, for example, in Intel this week. And you just never know when all of a sudden, you know, the light switch is just going to go off and everybody's scrambling to get out. And it can happen very, very fast. Now, I just want to talk about Intel as an example. Am I saying the market's going to crash on Monday? No. Am I saying the market's going to crash next week? No. But I'm talking about what's going on in the market today and what is the backdrop in terms of what is the setup and what are things that we're looking at that we're seeing in the market today. So let's dive in and take a look at the Dow Industrials. All right, the Dow was down 182.44 on Friday. Pretty tight little trading range. Very compressed price action in here. Now, a couple of interesting things about what we're looking at here. Here's that June 8th high. We have yet to go above that June 8th high. Now, I was looking at this the other day and I thought, okay, how does this compare to the corrective pattern that we had back over here in at the end of April, this peak on April 29th? Well, we had a zigzag pattern in here. And you could say, well, maybe we're doing the same thing. Well, we are doing some corrective pattern. But is this correction, you know, have we peaked here and we're ready to come down? We very well could be, and I'm going to look at that at a couple of scenarios. But when you look back over here, how long did it take us to take out this high? There was 18 trading days until here's day 18. If you start counting here, 1, 2, and count on out, this is day 18 where it finally took out this April 29th high. Okay, well, here we are with the June 8th high, and it's been 33 trading days, and we have yet to take out this high. So it really starts, in my mind, to beg the question as to, are we really still doing corrective action in here? Or have we really peaked and we've started our move to the downside? And we're going to talk about that. Now, before we move to the Elliott Wave analysis, let's just take a quick look at the weekly chart in here. You can see the Dow was down 202 points for the week, an inside trading range of the previous week. So a little more compression going on. The entire range was 632 points from high to low. And we'll see what happens this coming week. We have yet to get a close below a prior week in here since this whole rally started in March. So we haven't had 1 week where we closed below the low of the prior week. So we'll see what happens this coming week. Now, when I take a look at the Dow picture, here's the Elliott Wave picture, sorry. This is the daily view, okay? And right now I've got the primary wave 2, counter trend wave 2 at a high here on the June 8th high. And yes, when you drill down and look at the wave structure down in here at the hourly view, which is, I use the 65-minute view, there was 5 waves down in here for wave 1. So now what we've been wrestling with, and you know, the market just keeps teasing the bears, okay, is what have we got going on since then? So to me, the best count that we've got in here is this zigzag pattern for a wave 2. So an A, B, C to the upside, okay? And we've gotten very choppy in here, but here's the possibility. Here's 2 possibilities as I see it. Possibility number 1 is that we have one more push to the upside in here on the Dow Industrials to finish off this small wave 5 of C. This looks like we had a sharp zigzag pullback. It looks like we had a flat that's going underway in here. And now we could possibly push again higher. Now, why am I saying could possibly? Because if you come down and take out and go below this level right here, 26,297, then you're trading below the high of wave 1. Okay. and that makes it an invalid wave count in here, and it increases the odds, increases the chances that wave 2 is most likely finished with the alternate count down here. The alternate count would put wave 4 right here, and wave 5, little wave 5, and wave C and wave 2 ending here, and that we have started down with a wave 1 right here. Okay, so that is the picture as an alternate count, but these are the two scenarios, and to me, this is a critical level on the Dow. There's another critical level on the S&P. I don't have that right in front of me, but it's similar in terms of the setup, but 26,297 is what we're focused on the Dow Industrials. Let's take a look at the VIX. Now, the VIX was down 0.24 on Friday. You could see how it tried to make a move, and then it came back in here, went to a multi-day high, and then just pulled back. Now, the interesting thing that I find when I look at this, look how we're still staying elevated. We're above 25. But here, look at this low right over here. When is this low? June 5. Okay, when did the market have its little peak? Now, the S&P, granted, has gone slightly above it, but the Dow peaked in here. The Russell 2000 has gone beyond this peak. So right in here, so far, this low on the VIX has held. Okay, the June 5 low on the VIX has held. We came down and tested it. The low in here is 23.54. The low here, 23.61. The low on Thursday, 23.60. We have not taken it out, and then we turn and we started rallying pretty strongly on Thursday, a little bit of follow through on Friday, so we'll see what happens. I think if we come up and break this trend line here, this is going to imply that the market is selling off hard and the VIX is exploding again. So we'll see what happens, just like it's happened before, many times before. But that's the current picture on the VIX. Let's take a look at the McClellan Oscillator. Actually, before I go to the McClellan Oscillator, I just want to put a little plug in for my website. If you find this information interesting and would like to have more of this kind of information on a regular basis, we talk about this every day with the insider members. Go over to joehenches.net, check out the website, check out the membership. All right, let's move to the McClellan Oscillator. See if I got that here. And I want to make sure it's on the screen. So this is the New York McClellan Oscillator. So we came back down slightly below zero. The interesting thing about this is we seem to be right at a little bit of a sharp support trend line. Now, it's fairly steep, but it's still an upward moving trend line in here. But the thing that really catches my interest is the Summation Index. Now, the Summation Index really kind of simplifies the McClellan Oscillator. It's a sum of the McClellan Oscillators. And what I find interesting is the divergence that shows up in here at the highs, especially key highs. So here's January, right? Here's January when the market moved to a high, and the Summation Index did not confirm the move into February, into the high. And then we got this big sell-off. We're getting a similar type thing right now in here, in that it's not confirming the move of the S&P to a higher high. And when you look at the NASDAQ, it is definitely not confirmed the move of the NASDAQ to a higher high. Here's the peak in here, June 22nd, June 23rd or so, right in here, late June. Okay, and then the NASDAQ, what did it do? It kept punching to new all-time highs, not confirmed by Summation Index, just like back here in January and February. So I view this as a big flag. Okay, it's a big caution flag to me when I see that, and then I start to see it on the New York also. So that is the McClellan Oscillator. Let's take a look at Intel. Okay, here's a view of the daily chart of the last 2 years of data on Intel. And look at this big island top up here. Okay, I'm going to zoom in a little bit. We had this back in February, late January into February, the big sell-off in March, the rally back. We came in and kind of closed these gaps as we rallied back up into this. Then we broke this upward trend line in here. Okay, and then we've been kind of chopping sideways until this earnings release this last week. Okay, the earnings came out after the market closed on Thursday, and this is Friday's price action. It basically just collapsed. This was the biggest move down since this day right over here. I think it was March 12th. Actually, it may have been, I think it was this day right here, because it closed on this huge bounce and it came back down. It had a similar huge move to the downside. That this was really big. Look at the volume, look at the capitulation selling, and it's to be seen whether this is truly capitulation or not. I think of capitulation as, okay, everybody's, giving it up and then it turns. I'm really skeptical of that. And so when I think about, I thought about this and I thought about the price action in here. I mean, Intel is a Dow stock. I mean, it's one of those big name stocks, been around for a long time, very solid. And of course, they had their earnings come out, and then they talked about how they're changing their manufacturing structure and they're going to start outsourcing, et cetera. And everybody went, oh my gosh, something's changing dramatically here. And everybody's like, basically the music stopped on Intel and everybody rushed to grab a chair. And that's exactly what happened, down 16.2%. So, this is the kind of thing that can happen, and it can happen very, very quickly. So, I think it's kind of a warning shot a little bit. We've seen some of this happening in some other stocks, not to this degree here recently, but we've got a lot of earnings coming up this coming week. We'll see how this week goes. We got McDonald's, 3M, Pfizer, and Visa on Tuesday, Boeing and Facebook on Wednesday, Procter & Gamble, Apple on Thursday, Caterpillar, Chevron, and Exxon on Friday. So big week for earnings, and I'm sure there's just a ton more beyond that. All right, everyone, that's it for this video. If you felt like the video was helpful, give it the thumbs up. If you are not a subscriber to the channel, hit that little subscriber button. And again, if you'd like more of this kind of information, head on over to joehenches.net, where we talk about this every day. All right, everyone, have a great rest of the weekend, and we'll talk to you next week.